Can you guys hear me and can you see the chart screen? Cool. What can you see? Just me and the chart? Cool. You can't see me? You can't see me. All right, perfect. Do this here. You prefer it overlaid or side by side? Or maybe I should just do, if I click content only, can you still see me on the side? Like if do it like this? Okay, cool. Then I don't need to do the overlay. Yeah, don't use the Zoom chat. Just use this. If you guys can see me on the side, then it doesn't matter. All right, cool. Perfect, perfect. So I'm just gonna turn that off then. Yeah, no, I know the overlay is kind of weird. This is nicotine. Nicotine. It's a jewel. Yeah, I figured we'd start with VF because it had a nice day today. All right, let me see. Probably good to get started. There's quite a few people in here already. Second here. I mean, you guys are quick with the memes. Okay, so uh, I do. Um, all right, so what we're gonna do today is kind of do what I do every week anyway. Um, I've done this before, but I know a lot of you either are new members or still find it relevant to do this regularly. But um, this is something I recommend doing regularly with your portfolio. So what we're going to do today is we're just going to basically go over what I like to call technical structure. Some people refer to it as technical health. I'm not really a setup trader, so I'm not looking for like wedges or, breakouts that we're retesting. I mean, I look at those things, but I'm not looking for those things. If I see them, it can add some, corroboration to what I think about a stock in the short term or whatever the case may be. But I'm not like a setup trader. I'm not hunting setups, and so you'll kind of get a feel through these workshops and the other ones, if you've seen my other workshops, of like how I think about stocks and how I think about technical structure and technical health. And if you pay attention to this one, you'll get an idea of that as well, even if you haven't seen the other ones. I said to watch the other ones over the weekend if you haven't, just to get a feel for how I think. But even if you haven't seen the other workshops, you should be able to follow along with the process here to a degree. So what we're going to do is we're going to go through most of my holdings. We're not going to go through the legacy positions. I say this pretty much every time we go through chart workshops, but like I just don't look at the charts for Tesla or Amazon or Robinhood anymore because I own them so much lower that it just doesn't matter to me what they do in the medium term. So outside of those three positions, the legacy stocks, we're not going to look at those. We'll look at pretty much everything else. Um, we'll give you an idea of where the risk is, where the supports might be, what stocks have to do price action wise to reinforce the idea that they're healthy. And then once we get through all that at the end, we'll do questions. So if you have questions that are related to something I am talking about, like currently, like while I'm talking about it, you can ask those questions. But if you have questions about something else, if I'm talking about VAV, you have questions about some other stock, wait till the end so that I'm not like scatterbrained and all over the place answering questions. So say we'll do like 15 minutes or 20 minutes of questions at the end, but for now we're just going to go over and I'm going to flip through daily, weekly, monthly charts and just kind of give my overview and what I look at and what I'm looking for. So We'll start with VF because it was strong today. It had a nice day today on that B Riley upgrade. B Riley raised their price target to 22 this morning, and this stock came and pushed into the top of this range. So I talk about moving averages a lot, not because I think that there's some sort of magic tool, but because I think they're a simple way to get perspective on price. I don't really consider them to be an indicator. I mean, I guess depending on the type of semantic language you want to use, you could group them into being an indicator. But I don't use indicators. Like I don't use RSI, MACD, or any of that type of stuff. I just look at price, volume, and then I use the moving averages to sort of guide my perspective on price. All moving averages are doing is showing you average price over a period, right? That's essentially what they're doing. The exponential moving averages are doing it a little bit more aggressively, but that's essentially what they're doing. And so it gives you a benchmark of what to expect from price, right? Like you want to see price above all the moving averages because that means the incremental buyer is paying more than they were over all of those average periods. That's what it means for a stock to be above all of its moving averages, right? The price is trading higher than the average price over any of those periods. And so that is kind of in the basics of why I care about moving averages, but you'll see me reference them a lot as just sort of running levels, right? Like, a lot of times you'll look for areas of support and resistance, just like straight line support and resistance where you're looking at price levels where a stock has bounced before and resistance in terms of price levels where a stock has rejected before. That's pretty straightforward to do. You don't need any sort of formal education to learn how to identify uh, support and resistance. Support and resistance is simply a function of where has price bounced in the past, where has price rejected in the past. The more bounces, the stronger the support, the more rejections, the stronger the resistance. That is support and resistance in one sentence. Um, but beyond that, moving averages can function as a sort of floating support, if you will, to where you want price to respect them for as long as possible. And when price stops respecting the moving averages, then you have to take a little bit more of an analytical approach and a little bit more of a sophisticated technical view. So we'll go over some cases today. I mean, there are some stocks that I own that are um, below, certain moving averages, and we'll talk about that and talk about what the risks of that are and talk about why, I may or may not have sold them, right? And in the case of the stocks we're going to go over today, I haven't sold any of them because I'm holding them all. So that kind of give you a perspective on what we're doing today and how we're going to look at price. If you're new, if you've been to my workshops before, you kind of already know this about me and know how I look at price, so it should be easier to follow. Okay, so VIV had a nice day today. It was up 6%, pushing into the highs of this local range. As you can see, right, 20 has been an issue here. We had a soft attempt here, fell back down to 17, consolidated, and then now we're edging back up and coming into the highs of this range. And now we have earnings coming up this week for this name on Wednesday. So, we'll see if we get that breakout over 20, right? This thing's potentially setting up for it, but it's not guaranteed. Doesn't mean you're going to gap up on earnings no matter what, but we are potentially setting up for a little bit of a breakout above that 20 level if the earnings are good. Now, the weekly's been on an absolute monster tear, right? I mean, we got in down here and now, the stock's just been consolidating nicely in this 17 to 18, really 17 to 19 range. We've seen this nice weekly consolidation. It's building support here or trying to around the $17 level. You can see this lows of this candle 1691, lows of this candle 1698. So you can kind of put in the back of your mind, sort of a mental $17 support here for the stock as it rides up. You flip to the monthly, you see sort of the same picture here. This is really, really pretty monthly action where you get this big gap up and then you get tight consolidation here, right? The tighter the consolidation and the less price move you give up, the more bullish it is, right? And you see very little give on the price here, consolidating tightly, and then you see this nice candle forming in this month to kick off the year right above the highs of these two consolidation candles and pushing into new highs. So really pretty action on all time frames here. I don't think there's anything concerning in terms of the technical view, right? If we zoom out a little bit here, we see what's going on. Stock had been in a brutal downtrend, attempted to stabilize here over the last year or so, and marked its bottom down here and then made a monster reversal off the lows on some good fundamental news for this company. Now, the volume has not been overwhelmingly strong, but this is the sort of potential we're looking at with this name, where you have a base going back to really 2002, right? You can see how long price has just been stagnated here. And so if you can break away into the 20s, whether it's on this earnings report or later this year, you have a shot up at this 27 high of this base. And, if you get there, you have a hell of a lot of range, right? I mean, you can zoom out even further here and see, this stock had a crazy, crazy run in the dot-com bubble, ran to $700 a share, and then just collapsed with the rest of the market in '01, '02, '03, and then has spent basically the better part of the last 20 years consolidating in this range. So this is a name that I think price-wise continues to have a lot of potential. It's why I still own it, obviously, and it is a pretty decent weighting in the portfolio. So like how this one's acting, no signs of alarm here, right? I mean, even when you had breakdowns in the daily structure here, for example, right here, you had a breakdown in the daily structure. You caught this 17 support, like I mentioned earlier, right here. You see the 1669 bottom, 1691 bottom, 1698 bottom, 1730 bottom here. All these candles sort of reinforcing support around that 17 area, and you did get your bounce here, reclaim the 9 and 21s, and then this candle tried to break it down and then was immediately bought up to recap the 50. So this is really, really strong supportive action, in my view, around this $17 area that has allowed this stock to hold up really well and continue to grind higher. So testing this 20 resistance headed into the earnings, and we'll see what happens. I know some of you who are new have asked me, in the past, like, oh, if I am interested in Viavi, which you've owned for a while, or another name that you've owned for a while, like, where's your original thesis? It's all there. You search from Stock Talk Weekly in your Discord search bar, type in the ticker. You may have to scroll a little bit, but you'll be able to find my original post. Usually, all my original posts have a thesis linked to them where I write 4 or 5 paragraphs explaining to you why I'm buying the stock. If you want more details about a thesis or an individual stock, and I haven't written the answer to your question in the original thesis, then you can ask me, and I'll answer it. But try not to ask questions that can just be searched in the Discord search because just search them. It's better for me not to have to do that for you. It's pretty easy to do. So, yeah, from Stock Talk Weekly, whatever ticker you're interested in, you'll be able to find all my commentary on it, even if it's something I don't own right now. I mean, there's a lot of good stocks that I have been in the past that I don't own anymore, and you can find out what my opinions were at that time too. Is it a good time to enter VF? Well, I would have said ideally, you would have taken one of these entries, either the test of the 50, the test of the 9 yesterday. You had plenty of 21 EMA tests here and attempts, although you probably would have gotten stopped out if you got that one because this one knifed you all the way down to 17. But this one's been a bit tough to get a pullback entry on because of the way that it's pulled back, the nature in which it's pulled back. Most of the pullbacks have been fake out breakdowns. So it's tough, right? Like when you get a candle right here, you're piercing through the 21 EMA. You want to be a hero, maybe, right? But it's tough to be a hero there. And then you get these sort of stick saves where, price quickly rebounds back to 17s, 18s. So yeah, if you didn't get into this one with us back here, it is hard to now try to find a spot because of the way this thing trades around the moving averages. It makes it tricky. There's a lot of fake outs. There's a fake out here, fake out here, fake out here, right? And that's just in a matter of, 4 weeks, right? It's faked out short term, daily chart watchers. It's faked them out 2 or 3 times in just a couple of weeks. So yeah, this has been a tricky one to get into. Do I think this is an ideal entry pushing into the 20 resistance? No, of course it's not an ideal entry. Could you buy it if you are worried about a gap up on earnings and you don't have a position? Yeah, but you have to understand the risk, right? I mean, there's no guarantee that we gap up again on earnings. Keep in mind, this was the last earnings. We were already long the stock going into this earnings, right? We got long the stock here. Stock gapped up on this earnings, so we already have a nice cushion on this position from that 20% gap up on earnings. It's easier to take the risk into this next earnings with that cushion. If you don't have a cushion, it's tough. So yeah, I mean the answer is case by case. If you're already long the stock, you want to add a little bit more into earnings because of something you read or you're really bullish on it. That's fine. Just understand the risks of buying into resistance after a gap up. There is risk to that. I obviously still like the name and think it's going to trend higher, which is why I still own it. But it's the type of scenario where on a somewhat underwhelming earnings report, maybe the stock pulls back 4 or 5%, maybe I'd buy more, So we'll see. I never. One thing you'll know about me is like when the earnings reports come out for people who follow me for years, is I don't just like react right away. I wait to digest the report. I actually almost always wait till the next day. Now there are exceptions to that. Sometimes I'll see a report and be like, "This is an insanely good report," and the stock's not moving. In that case, I might buy after hours or pre-market. But usually, I'll read the report, give you guys like a shorthand opinion on it initially, dig into it deeper overnight, and then the next day, I want to see the price action. I want to see how market participants are responding to it. A lot of like fundamentally geared or thematically geared traders and investors, they don't care about price and they don't care about technicals because they're like, oh, it doesn't matter to my thesis. I really push back against the idea of that because I think price is the most intelligent mechanism maybe in the world. Like it's a market price because it's millions of different parties feeding you their opinion at once, and it's really hard to replicate that, the intelligence of that. That's a very intelligent mechanism. It's a lot of really smart people all putting their folded up slips of paper into a hat, and it's like the outcomes of that I think are very hard to fight. So I like to wait for the price action reaction, and if there's if there's a good report that I really like on a stock that I really like, and I see a -5 or 6% gap down off the open, very often I'll be a buyer of that. There was a Kratos earnings report last year, at the beginning of last year, that's exactly what happened. The stock went down 6%, and then I put a note in my journal and said, "This is a dip that I'm buying. This is a buyable dip," and the stock proceeded to rip like 200% in the months following that. So if you feel like you have a grasp on the name and you feel like you have a grasp on your conviction, you can play hero in those situations. You see a 5 or 6% pullback off the open on a good report into the 21 EMA. I mean, that's probably a buy if you know what you're looking at. So, yeah, I like to navigate with not only data on the fundamentals and the thematics, but also data on the price too. I think that all three of those things better inform me. Um, People are asking questions about other stocks. Save the questions for other stocks for the end. And if you want to ask a question about the stocks that I'm going over at the time, that's cool. But save the other questions for the end because I just don't want to get scramble brained and be answering a bunch of different stuff at once. But I will answer all those questions at the end. Um, okay, let's go top down now. So that's VAV. Let's look at ENS, largest position. I mean, I can't complain about this stock because it's just traded so beautifully for so long. We got along the same around here, and it's just you know been a moon race since then, just going straight up and really showing a lot of respect in general for not necessarily any particular moving average, but for this 921 EMA cluster, it has showed a tremendous amount of support. Now, you have some breaches. Yeah, absolutely. Over here and over here, you have some breaches, but they've been bought up immediately, right? Like every single 21 EMA breach has been bought up immediately with a candle that not only retakes the 21, but retakes the 9 as well. Look at this candle come back here, this candle as well, and then you just get follow through 3 or 4 sessions of green. Um, this thing isn't red a lot. When it is red, it's barely red and continues to trek higher. I just think this thing trades at just still a very reasonable valuation. It's trading at 12 forward PE, really being one of the only battery OEMs in the entire country. And at the current market cap, with the potential for growth here, the potential for the return to growth, I should say, the niche I think they have with Bren-Tronics. I mean, there's a reason this is my biggest position. It's probably my favorite stock in the world right now. Um, I have been actually wanting a pullback. I wanted to get this up to 25% of my portfolio late last year, but it just would not give me a pullback. I was hoping maybe it'd come back to the 120s and I could like reload some there, but it just won't pull back. So that's a good problem to have, I guess, because it's such a large weighting in my portfolio. But um, it does sort of annoy me because I wanted to be even more high conviction on this than I am right now, which is kind of crazy to say because it's probably I think this is my biggest weighting for a position. Maybe not ever. I think there was a time back in 2017, 2018 where maybe Tesla was bigger, but um, one of my biggest positions ever by percentage weighting for sure. Um, It's really, really hard to your question, Doc. I don't know how to get into this name. Like I said, I wanted to upsize, but it just won't pull back. I mean, this was probably one of your best opportunities. This was also a good opportunity here, pretty soon after we bought it, this retest of 108. Outside of those two opportunities, it just hasn't given you a lot. I mean, 21 EMA pullbacks seem viable on this. We do have earnings coming up, on the 4th. So, maybe you'll get a pullback there. Yeah, I would be a buyer of this on any kind of earnings pullback. So that may be where you get your opportunity. But yeah, it has been a tough stock to get in, but it's been a great stock to own. So, like I said, good problem to have. Um, let's see here. Let's move to the weekly here. I mean, I don't, again, this is one of those charts where, when you have charts that are just above all the moving averages riding, it's going to be tough to find any problems with it. I mean, you could say the monthly is a bit extended here. I mean, you have one, two, three, four, five, six, seven, 8 straight months of green on this name, coming out of a pretty big base. I mean, how long was this base? It wasn't really a base, but I mean, coming out of this tighter price structure, this is just a breakaway move, right? Like you see how long this thing just traded pretty messy, back here, 14, 15, 16, 17, 18. I mean, you didn't want to be involved in this name for any of those years. And then, price sort of buttoned up a little bit. You can see the structure improving here compared to these vicious lows. You can see the structure buttoning up here, and then boom, recap of the 50 month, and this thing just took off. Weekly looks pretty similar here. You're going to see an insane weekly run. The weekly actually looks probably the craziest. I mean, look at this. You have one, two, three, four, five, six, seven, 8, 9, 10. 28 weeks and like three or four are red. I mean, that's insane. Especially considering the level of volatility we've seen in the market, especially the level of volatility in SMID caps in general. This level of buying is insane. So this is like a complete re-rating underway in my view, and a re-rating that's not done yet, which is why it's still my largest position. But again, no warning signs here, right? Like no sloppy action, just gorgeous, gorgeous action to the upside. Nothing to concern yourself with. So not really a lot to say here. Technically, this is one where again, I'm trying to kind of put you guys in my shoes when I do these chart reviews. When I see a chart like this that I own, I'm like, cool. Well, what am I worried about? Like it's paying me, it's going up. There's nothing to complain about. When there's nothing to complain about, you don't need to put a lot of thought into it. You're just like, hey, let your winners work. That's something that I think is universally preached by all the greats. Druckenmiller, Lynch, Buffett, they all preach that. Let your winners win. Like, don't disturb your winners. One of Buffett's great quotes is like his biggest mistake of the last 20 years was never buying something. It was always selling something too early. And Druckenmiller said similar things as well. So knowing what you own and letting your winners win is a hugely important part of success in investing. Like that's where all the conviction comes in and where all the attention to detail comes in. So this one's been a beauty, nothing to complain about here. Let's look at our other energy grid name. Now, PLPC was, it's still a name I like a lot, but just dropped in weighting a lot because it doesn't have options. And, the portfolio has grown substantially. I mean, the portfolio is up 40% this year, up 500% last year. If you don't have options, you're going to get left behind. And that's sort of what happened with this name. It just got dropped in weighting. I didn't sell any, just fell in weighting dramatically because it can't keep up with positions like Inersis and Amcor, which have options weighting that accentuates the weight in the portfolio, right? When Amcor started off this year ripping, had those 10% days in a row, that moves the option so much that it makes it rise in weighting dramatically. Now, the sword cuts both ways, right? Amcor fell in weighting this last week pretty dramatically as well, right? It was up near 20%. It's back down near to 16%. That's going to happen because, again, it's higher beta because of the attached options exposure. So, this is a name that, again, nothing to complain about with the chart. Has it been a little volatile? Yeah, absolutely. I mean, this peel down from 245 to 183, I know had a lot of people doubting the thesis. A lot of people were tagging me left and right. What's going on with PLPC stock talk? And then look at the recovery, right? Bounced right off 183, came straight back to 240s, and now we're trading 240 again. So this is just some consolidation near the local highs. Um, One thing I will be watching for these guys, they don't have their earnings until March. One thing I will be watching for these guys is did they do their tariff pass through well enough? You know, in last earnings call, they talked about wanting to raise prices to accommodate for tariffs. They took a punch to their margins last earnings as part of the reason why the stock reacted negatively on the last earnings. So I want to see that. You know, like I said, no matter how much I like a stock, I still monitor them quarter by quarter. I still hold their feet to the fire. Like companies don't owe me anything, right? It's my job to find out which ones I should still own and which ones I shouldn't. So for now, I really like this name as a, general power grid hardware name. You know, I think it's a pretty one-to-one correlative beneficiary of any investment or activity in the power grid. So I like this just as a straight up winner from power grid investment. You know, no frills, but also a very tightly held stock, also a very volatile stock as a consequence of that. And, there are some tariff headwinds that they do have to resolve. They said they were going to raise prices to accommodate for tariffs. I want to see them do that. If they don't do that on the next quarter, that's going to annoy me a little bit, may lead to me trimming the position. But if they do that, it may lead to me adding to the position. So it always sits in a balance of execution to me, both on a technical side and a fundamental side. So, if they act well, then everything should be good. But I think those price raises um, will solve the problem in my view. So that's what we'd like to see. All right, Amcor next. Now, Amcor has just been an absolute beautiful winner for us since last year. So we got an Amcor last year around here, September 5th, 23, $24. And been some volatile times in this one for sure. I mean, even recently after we got into it, it consolidated for a while. People were wondering why it wasn't moving. Then you had to graduate up to this 28 to 30 zone and show a lot of volatility here. You had this monster candle that got faded, then this dump, and then you came up here to 40 and had a brutal drop back down to 29. So there's been some volatility here, absolutely, but conviction, right? I mean, again, when you look at what people were tagging me in back here in November on Amcor, look at all my responses. I was just like, I'm not selling. I'm holding. Like a little volatility is not going to shake me out. And then, we had a beautiful rebound up to 50, consolidated back down. So this thing's been vicious in terms of its ability to drop off these gap ups, right? It has these big moves to the upside and then vicious cuts back down. So this is one of those names where if you're not convicted, you're not going to have any luck holding this, right? This is going to be a very, very tough name to hold for people who don't understand the thesis. And so if you want to know the thesis, I have so many audio recordings on X, plenty of posts on Twitter, plenty of posts on Discord. You can go read all my commentary on Amcor if you don't understand why I own this stock. But um, I think right now in this current zone of focus, if you will, that we are in around U.S. semiconductors and U.S. semiconductor competency, I think this remains a really, really smart exposure. Now, is it more expensive than when we bought it? Yes, the stock has doubled. So yes, it's twice as expensive as when we bought it. So that's not driving the thesis as much. The cheapness of the stock is not driving the thesis as much. When we bought it, it was trading at less than one-time sales, right? And I was like, that's ridiculous. This is the only major capable packager in the country, partnered with TSM, partnered with Apple, partnered with Google. It makes no sense that it was trading at less than one-time sales. And of course, the market eventually agreed with us and sent this thing much higher. And now it's trading at like two times sales. So I don't think it's expensive yet, but it's not as cheap as it was. And so that's less of a propellant to price now. The cheapness is less of a propellant to price. But I think it will still be a propellant to price is this idea of this still being a highly rare and unique exposure to US semiconductors because of the packaging competency and because of the rareness of packaging competency in the United States. Most of their big packaging competitors are international. And so that's an important thing to keep in mind when it comes to Amcor. But vicious a little bit with the volatility, but still, look, technical structure looks good, right? You're still defending the 21 EMA, still came back, recapped the 9 today. The weekly structure looks absolutely beautiful. The weeklies always sort of give you a breath of fresh air when you look at these names because it's just so much less volatile. And sorry, not less volatile. It's the same, obviously it's the same level of volatility, but I mean, it looks less volatile, right? And you can follow these 9-week EMAs. I mean, on the strongest stocks in the market, you'll see these 9-week EMAs like almost never get lost on the ride up. And even with Amcor, like even on this vicious dump to 29.70, which You flip to the daily, it looks brutal, right? You look at the fall off from it looks brutal. You flip to the weekly, you're like, what was I even worried about? Right? Like, where was the concern? Where was the sign? There was none. The second you flip to the weekly, you'd have been like, oh, this is a very, very, very healthy price action to the upside, right? You come into this 200 week, you float above it, you just keep climbing, you take the 100 week, and price is just acting gorgeously around this level. Like, I mean, look at the lows of these candles on the weekly. Like, if you don't believe in TA, you might call that voodoo magic, but look at the lows. And I mean, even here with this 2970 close, like, look at that, right? I mean, that's fidelity. That's fidelity. I mean, even if you, I mean, go back to ENS, right? Like, same thing. Like, look at this nine week EMA, like just coasting on it, right? I mean, go back to PLPC. I'm sure PLPC. Oh, PLPC is a little uglier. Let's see. LEU, that's a little uglier. But Amcor and ENS, I'm sure we'll see a couple others along the way, have this really, really gorgeous weekly structure where there's no reason to be shaken out and no reason to be scared at any point. Flip to the weekly structure and be like, oh, that's chill, and you don't have I'm just looking at 9 months just arbitrarily. I mean, you could look at 1 year, it doesn't matter. It's not going to change the perspective here. What we're focused on here is the ramp, right? This is not the price action we're focused on. So, we're just looking at the ramp that we've been involved in a more zoomed in fashion. Um, it depends. Anywhere from 10 to 20% is allocated to options. On some of the more recent ones have been closer to 20%. So it just depends. But yeah, these stocks have not given us much to be concerned about. A lot of these leading names in the portfolio have not given us much to be concerned about for quite some time. So that's good to see. So now let's look at some more volatile ones like OSS. So OSS, we got in right here for this gap, and then I got in 471. I know some of you bought a little higher, for 490, maybe 510. But we got it right here. This is where the public started to find out about it. This is the CES candle, I believe. Yeah, this is the CES candle, which, by the way, I gave you guys some nice heads up on that. I sat down and talked with that dude and posted a picture of the booth for you guys the day before this thing gapped up 20%. So if you weren't in this thing and you saw that CES post I made in my journal, which was like the only post I made that night, that was a nice note. And I hope some of you took advantage of that. But um, yeah, this is where the crowd started to find out about it. And once the crowd starts to find out about it, Twitter starts to find out, you're going to see price action like this, which is what we've seen. You're going to see this sort of euphoric price action and then, weak hands just getting shaken out because these guys don't understand the story. These guys on Twitter, I mean, they have no clue what this company does. They just hear edge compute, they hear computers in tanks, and they're just like, buying hand over fist. But I know the actual story here, and I like the idea of their sale of their Bresner business. It spooks some people, but I like it. I do think it's going to make it a little trickier for them to generate revenue in the near term, but I think it makes it more of a pure play, and I think that makes it interesting. So I have such a favorable cost advantage here. It's going to be tough to get me shaken out of this name. I do not anticipate being shaken out of this name. I mean, even on a 21 EMA forfeit, like this thing came back to the 7-8 range, I may buy more. So I don't know. This is not a name that, even with all of this retail popularity that's emerged, these sort of high volume volatility, probably not a name that I'm going to be shaken out with. I'm probably going to see it through, at least through this year, maybe even through next year. This might be a small cap that I stick with for a while. I mean, I've designated a core position for a reason. I think they're in a very unique niche opportunity basket, and if they execute, they can meaningfully increase the market cap. I think even more than it already has. So. Um, I'm staying long. Now, the daily action here is tough. It's very, very, very difficult to sit through, especially if you're trying to take any semblance of risk management. But um, nonetheless, bright side of the cup, we are defending this 21 EMA pretty well. And if you zoom out, we haven't really lifted off the base that aggressively, right? If you were to consider this whole chunk sort of a multi-month base, right around here from 4 or 5 to 7, let's call it, we haven't really spent a lot of time above that base, right? I mean, we had an attempt to break out here that was quickly rejected, and then this was the real first real move out of the base. Came all the way up into 13, and now trying to consolidate here and defend this $10 area. I would like to see us build some structure here around 10. There is a risk that you do come back down and retest this $8 area. That would be, I would say, the highest potential risk. But on the monthly and weekly, it looks like something that's just gotten started, in my view. You look at the monthly here and you see this big monthly candle sort of breaking it out of tighter price structure. See the same thing on the weekly, these big two candles lifting it off into new price territory, and now you're seeing some attempted consolidation here. So not a name that I'm inclined to sell anytime soon. Although the daily structure is a little noisy, like I said, the weekly and monthly structures show me a lot of potential. So yeah, it's why I remain in this one. Okay, let's look at our other more recent edge compute on-device compute name, Cena, which I'm a little underwater on my cost basis now, but not enough to be worried. Um, I bought around what 85 something. It's 84 something here. Tested the 21 EMA today, seemed to hold. I'd like to see this continue to be defended. 21 EMA breakdowns, although they're not the end of the day, they are annoying because short-term price tends to be working against you when you're below the 9 and 21 EMAs. For new traders, I want you to take very clear note of this. When you're looking at structure on your daily charts, you are looking at your expected short-term price action. Okay. Think 6 to 8 days. When you're looking at your weekly charts, you're looking at your medium-term price action. Think 6 to 8 weeks. When you're looking at your monthly charts, you're looking at your longer-term price action. Think 6 to 8 months. That is a very general rule of thumb, but it will help you understand why we flip through different time frames and why we look at price structure on different time frames. So be mindful of that. When you see breakdowns on the daily chart, it doesn't mean the stock is done. Okay, just because the stock is below its 21 EMA, some of you have by the way, some of you have toxically misunderstood this from my previous workshops, where I talk about 21 EMA breakdowns, and any time any stock I own is below the 21 EMA, people are tagging me in the chat like, "Stock Talk, are you selling it?" No, that's not how it works. The that matters a lot more for your entries. Okay, your daily chart, in my view, is much more important for your entries, where you're getting in and where price might go against you in those short-term instances. It is not for higher conviction, well-researched positions to say, "Oh, the stock's below the 21, I'm out." I mean, you can do that if you're a very, very short-term trader, you're a scalp trader or whatever, you can do that. But that's not the intention of observing price structure, or even observing warning signals on price structure. You just have to be aware of the risks. If you do go below the 21 EMA, you have to be aware, hey, you could see the 50. And you have to think of it like that, not like some knife in the thesis because the stock's trading below the 21 EMA or the 9 EMA. No, that's not how it works. And some of you take that way, way, way too literally. So if you're one of those people, stop taking it literally. Everything is contextual in markets. Everything. Everything is case by case. There are no hard rules. In my view, there are no hard rules. Everything is case by case. Depends on why you own the stock, depends on where you think it's going, depends on why you think it's going there. And all of those factors play a role in monitoring it every quarter and asking yourself, are those reasons still intact? Is the reason why I bought the stock still valid? Are the fundamental tailwinds that I thought were going to expand the earnings, are those still there? Or is the management failing, and is the price action failing? And if all these things are failing simultaneously, you saying, I still want to stay along the stock, that's just stubbornness. That's just confirmation bias. And that's where a lot of traders go wrong, is that they mistake. Because on one hand, what am I telling you? On one hand, I'm telling you, do your research, know what you own, stick to your conviction. And on the other hand, I'm telling you, there are signals the market gives you that you can't ignore. And some of you might take that as contradiction, but it's not. It's not. It just means that over time, you will develop a better instinct for distinguishing when you should lean on your conviction and when you should lean on your rules. But it's not black and white. I wish it was, because if it was easy, then we'd all just be making millions of dollars, and like no one would be listening to workshops, or no one would be paying for research or piggybacking stock picks because everyone would have it figured out because it's fucking easy. You just look at a chart. It's not that easy. And there are people on Twitter that will convince you that it's that easy. Like, oh, take my course, learn how to identify my setups, and you'll just be paid for life. The hell? If it was that easy, everyone would do it. Everyone with uh, a 10 IQ would be making millions of dollars in the market. That's not how easy it is. It's all just pieces of a puzzle. The technical side, the fundamental side, the catalyst side, the theme side, these are just pieces of a puzzle. And the more pieces you have, the better chance you have of solving it. That's it. That's the whole game. It's a game of probability. So don't mistake any of these things that I tell you about as like hard and fast, like, guillotine style rules where it's just like, oh, if that happens, I'm out. No, 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 no. No, you have to understand why you own it, what could invalidate your ownership. That's what's important. It's like the broader context. So anyway, Cena defending the 21. I don't mind the structure here at all. There's nothing alarming to me about the structure. I mean, yeah, 3 days red isn't great to see, but nothing alarming about the structure. Structure is still perfectly intact. Same thing with our weekly pinch that's happening here, right? So you look at this weekly pinch. I love these setups. You guys know this. You guys bought Kratos, Nebius with me last year. So many of our big winners last year. This exact weekly setup. It's not always on the weekly, sometimes it's on daily, sometimes on the monthly, but this is the type of weekly setup I like to see where you have a chance to break this 200-week moving average for the first time since what, 2023? Yeah, and that was a pretty short-lived break over there. So you have a chance to break this 200-week moving average, right? And you have this soft test here that got rejected, but this isn't a hard enough rejection for me to say that this is a failure. Why? Because you still have an upsloping 9 and 21 week below the price. As long as you have an upsloping 9 and 21 week below the price, you have a shot. As long as that's happening. Now, if price were to get rejected here more, right? Keep falling. Fall below 80, 9 week EMA, and then fall below this 21 week EMA, that would be invalidating. That would be a hard rejection off the 200 week. And I'd be like, hey, I bought it at the wrong time. But we're not even close to there yet. For now, price just seems to be consolidating after a gap. And here's another thing I want to talk about. And this is also very, very important for the noobs who constantly ask me about where to buy stuff. Let me find a better example of this. What's a good example? Hold on. Think of a good example of this. Oh, it's like a GLDD, which we're going to look at later anyway. Okay, so GLDD, right? This is the big gap from the alert day, right? Low volume selling after a gap, and then you get price stabilizing where? Right on the 9 day test. And then what happened? Day after JP Morgan upgrades the stock gaps up, right? A lot of you either will buy on this candle at the top of this candle, which, whatever, I get it, why some of you like don't want to miss alerts or whatever. But none of you understand, or not none of you, a lot of you don't understand the concept of stocks flagging after a gap up. Okay. When a stock gaps up in price like this, you should not expect it to just gap up again. Now, that will happen sometimes, but that's not what you should expect. Okay. So, as a again, game of probabilities, like I said, as a high probability trader, what you want to say is, okay, there's a gap up. I should now allow for consolidation so the moving averages can catch up. Okay? Healthy price action means the moving averages stay with the price. They stay supportive to the price. Price moves up, the moving averages staircase up underneath it. Where you get overextension and crashes, big dumps, is when price gaps and is not given a chance to rest, right? And then it falls back down to the moving averages. That's where you get bagged. For those of you who've ever been bagged, you buy a stock, it's down 10% the next day. That's how that happens because you don't give price a chance to rest. Now, is price always going to flag this way? Low volume selling down into support? No. Sometimes it will consolidate high and tight. Okay? And I'm sure you guys have heard that phrase before, high and tight, which means that price would stay much closer to the highs of this candle, but would consolidate. In other words, would trade sideways. for 4 or 5 sessions and then take its next leg up, right? And so we can actually see this with Pangea Logistics too. See Pangea Logistics back here last November, gap, right? Look, high and tight consolidation. This type of consolidation, that's high and tight. That's very bullish consolidation. Okay? What happened? High and tight consolidation, staircase up into a new price zone. Then you had this isn't considered high and tight because this is in a gap, but now you have very tight consolidation here in the 7 range, right? All the way through. Little bit of price slippage here, right? Which might have scared some people out, but smarter traders would have been looking at the supportive 50-day saying, hey, I need to let the 50-day catch up, right? That's what the smarter traders would have been doing here. And then as price sort of slips out of the 21, starts to stabilize, 50-day catches up, right? 50-day catches up, and then this is where we entered. Because 50-day had caught up to the 9 and 21 EMAs, price was wedged here. I felt like this was a good entry. Then we get the gap, and now what's happening? We're flagging on low volume selling. Flagging on low volume selling, right? So what are you waiting for here on Pangea Logistics? You are waiting for this 9 EMA to catch up to the price, which could happen in one day or one test, right? So it's important to keep perspective on these things and understand that buying right after a gap up, expecting the stock to keep going and going, is really just FOMO. What you really should be thinking about when you think about price is where could it go and where has it gone and what must happen to stabilize the price, right? Based on where it just went, what must happen to stabilize the price? And very often the answer is the moving averages need to catch up, which means you either need one. What are the only two ways a moving average can catch up? There's only two ways. Stock either pulls back or it consolidates. That's it. That's the only way average price can catch up to a much higher new average price, right? So you must allow for one of those things, two things to happen if you want an ideal entry point. Now, some of you don't really care about ideal entry points. That's fine. If you like seeing a bunch of red on your screen all the time, have at it. I don't like doing that. I don't like seeing red on my screen. When I scroll through my portfolio, I like that almost everything is green. And for me, that keeps my psychological fitness high. It keeps my conviction level high and, makes me less vulnerable to volatility. For you, it may be different. But for me, I don't like seeing that on my screen. I like having these ideal entries, which means when I have a stock that's gapped up, I'm waiting for a pullback or I'm waiting for consolidation. I'm waiting for the moving averages to catch up. That's just by principle. And it's part of the reason why some of you will tag me in stocks sometimes, be like, hey, Stock Dog, I heard you talk about this industry. This seems like a name you'd like. Why aren't you buying it? Very often the answer is it just gapped up without me. And I don't chase. I do not chase. Like there are exceptions. There are exceptions. There is stuff I will chase. There's probably stuff I'll chase this year. And some of you are going to tag me and say, why'd you chase that? But again, case by case conditional. If a catalyst is strong enough, there are exceptions to that I will chase. But um, yeah, it just depends on what the price picture looks like. SDVT. I don't know what stock are you talking about. I can look at it for you. Cena is a perfect example in this case. Yeah, okay, so that's not really down sloping yet. I would consider this more consolidative than 9. You'd need to see real pressure down sloping. I mean, if you get a knife through the 21, then yeah, you consider that down sloping. But again, you have weekly support here at 80, which is what I would be looking for. A break of this on the weekly would be much more concerning. What's happening on the daily to me is not concerning at all on Cena. Um, on GLDD, would today have been a good entry at the close since it bounced off the 9 EMA? Not a good entry, but a defensible move as a trader, even if it fails. Let's see. Yes, today would have been a very defensible entry on GLDD if you did not own it. Yes, because look, you got a lows of a candle, you test this 1479, and what happens? Price bounces 10 cents. So yeah, that that's not a bad entry today on GLDD if you wanted to buy that. Do you consider Mac? I do not look at MACD, RSI, Bollinger Bands, Fibs, nothing. I just look at price, volume, moving averages. That's it. No indicators. Do you buy the bounce of an EMA test or an EMA test? It depends on my conviction level and position, depends on how much size I might want. Again, guys, there's a lot of factors that go into this. It's sometimes I'm willing to wait for confirmation if I already have a position, I already have enough size, I'm comfortable. I don't need to jump into more. In those cases, I'll wait for a confirmation of support. There are other cases where there's a stock I'm dying to buy and I got locked out of it because of a gap up, right? And it pulls back into the 9 EMA. I might just buy it. I might not wait for a confirmation of 9 EMA support there. So again, case by case, it's like it depends on how much you want the stock, and how much risk you're willing to take. What you should think about when you're buying a stock is how badly do I want exposure here? And do I have good reasons for wanting exposure? If you just really want exposure because your favorite guy is talking about it, your favorite influencer is talking about it, that's not really a good reason. If you've studied it and you have this overwhelming desire to own it, okay, maybe you want to take a bit of a riskier entry. Maybe you want to enter off the 9 instead of the 21. You know, that's fine in my view, as long as you understand the risk. As long as you say, hey, if I buy GLDD here today, there is a chance that it'll come back and retest this 21. If it fails to hold this 9, you have to be okay with that risk. If you are, yeah, it's a great entry. Um, SAIC was down. How do I read the chart? Let's see. I don't own this name, but oh, that's ugly. That's an ugly candle. You need a stick safe candle tomorrow on this to fix this. Otherwise, you're just going to get price pinned down here, probably fall back to this 103 range and then begin consolidating again. You'd want to see an immediate reversal on this tomorrow. But that's not good. You don't want to see a recap of the 200 and then an immediate failure. This is, to me, a no touchy until you can get back above the 200. Um, yes, I closed Depro a long time ago. It always surprises me when I get questions like that. I post a portfolio update every week. Is ENS a good example? Yeah. Yeah, sorry, we were going to go over MBIS. I got distracted again. This is what happens. Okay, save the questions for the end, guys, so I don't get distracted. We were going over MBIS. Nebius here does not look good. Um, yeah, it just does not look good on the daily. Now, on the weekly here, you have what I would call last ditch support. So around this $90 area, which happens to coincide, I think, almost perfectly. Yeah, your 21 EMA here is at 91.83. I think it's very, very important to defend this $90 area. If you can do that, then we can flip to the monthly and get a little bit more clarity here because the monthly does look very, very much intact still, right? Let's look at this on a 2-year perspective. So on the 2-year perspective, this is the monthly, looks very much intact, right? There's no alarms here. Now, when you start flipping to these lower time frames, you start seeing the concerns, right? These big high volume sells here off the highs. Although I think a lot of this was just profit taking. This was a brutal sell, right? You fell from 135 all the way to 78. Stock basically got cut in half and has now attempted to stabilize and is regaining some momentum here. But the technical structure is not pretty by any means. This isn't a chart that if I didn't already own it that I would be buying. But again, this is a name that we have so much cost basis advantage on, right? We bought it last May down here at 23. So my cost basis advantage is so deep on this that I really don't care what it does in the short term around this level. So you want to see it defend basically right here. That's why I was calling it last ditch support. You want to see it bounce off this 50 breach. So you want this to be a fake out here, this 50 breach, and you want to see green tomorrow on this name, and you want to see as quickly as possible a recap of those short-term moving averages, the 9 and 21. You want to see those recaptured pretty quickly, which would mean you'd need to see price on this thing above 97, I would say, in short order within the next few weeks, ideally, because otherwise you're going to force some pretty ugly weekly closes tucked under this 20 week, and you don't want to see that. So I'd like to see price reverse here, get above 97, and ideally above a buck oh 02 uh, pretty soon. Pretty soon, meaning the next few weeks. And if not, then this name may continue to be under pressure for the short term. So I still like the name a lot, but technically speaking, not as pretty as a lot of the other names that we just went through. So yeah, going one by one. Don't worry, we'll get to everything. What are we on now? Hold on. THR, THR. THR, haven't talked about this one much since we bought it, but it just hasn't given us much of a reason to talk about it. Just no headaches, really. It's just drifting up higher and higher. Um, Acting on honestly very, very well for us. Bought around here, and the thing is just drifting now into this 43 area. Done a nice job of defending structure here around the 21. Um, I think the thesis here around heating is still pretty good. The thesis around liquid load banks, I think, is still pretty good. I don't know how much momentum we'll see in the immediate term in those businesses, but it's so cheap that I don't think the market cares. And, it is operating from a position of strength these last several sessions and has shown some relative strength on a lot of market sessions. So I think THR still acting very well. And this is quite pretty on the daily here. You can see no even attempt to want to look at that 50-day moving average, just playing around this 921 cloud and doing it pretty cleanly. This 37 support here gave maybe a little bit of concern, but it held it well and then popped right back into the 40s and is now cruising pretty handily to the upside. So yeah, this looks great. Nothing to be concerned about. Yeah, Thurman looks fantastic still. Weekly looks great too. Monthly looks great as well. Peeling off. So yeah, looks fine. Thurman, nothing to be concerned about. Again, another name that has sort of fallen in waiting because again, no options on this position. So just can't keep up. Just like PLPC, it can't keep up with the rest of the portfolio. Um, LEU, Centrus Energy. Now, daily has been messy lately, especially today's candle, not a pretty one. Um, yeah, it looked really nice. We were around here, 345, pushing off this 21 EMA, pushing off this 100-day. Last couple days have sort of soured the technical picture. But again, this is one of those names where we've owned it since last May. I haven't sold a share. Still managing to hold up and waiting, largely because it was such a high weighting originally that it's still sort of hovering around the 7-8% range in the weighting. But you look at it on this monthly picture, and what a beauty! This is like as good as moving average science gets on charts. You have this 9 month cross here, this just absolutely textbook hold of this declining 200 month here. Look at these two candles on these monthly closes, just textbook, literally textbook here. And now you have this cross forming. So maybe the prettiest monthly chart on the market. I mean, look at the range, right? Like look at what we're dealing with in terms of range here. Look at the cluster of volume here. Look at the prices here. You're talking about $2,000 a share, at the highs of just this local base, not to mention the $5,000, $6,000, $7,000 highs from back when, oh 05, oh 06, oh 07 on this name. So from a technical perspective, this is just an insanely good looking monthly chart, in my opinion. But more than a technical perspective, this is, in my opinion, the best nuclear stock on the planet because it's such a rare exposure. It's the only US enricher in the country. They're expanding capacity. I just can't bring myself to sell this stock. We own it at 96. I just still can't bring myself to sell it. I think this thing will be many $100s. I won't put a number on it, but I think it will be many $100s. Um, a lot more than the local highs. So, uh, yeah, I don't know. I still really like Centrus Energy. And again, you want to read my thesis on it, you can go back and read all my posts about Centrus if you're not familiar with it. But the monthly chart is just too pretty. Like this is so pretty. Like the way that the price is acting around these very, very important levels is meaningful to me. So yeah, not centrist daily chart has a little bit of noise, but the monthly keeps me pretty bullish on this one. All right, let's look at Huntington Ingalls. So this one's been a beauty, climbed and waiting so much for us. Even today, I thought it was about to break below the 9 EMA and it just stick saved itself. Look at this candle. It was breaking down here today and then just by the close managed to retake this 413. So this has just been beauty. I actually have some more 300 calls coming up in March, I believe. I might take those. I might take a couple thousand shares off those. So I don't know. This is probably going to go up in waiting again in March, to be honest. I'll have to figure out how I'm going to manage buying power because I have ENS contracts coming up for exercise too. Um, so I'll have to figure out the buying power situation. But I just love this name. It's the best pure play on shipping. I mean, we bought it down here, last whatever May or June or whatever it was, 210, 215 range, and this thing has more than doubled. Um, and it just acted wonderfully. I mean, we pulled up the weekly chart here, another one of those. See, oh, I was looking for comps with Amcor and ENS, right? Look at this nine week, just a steady ride up, right? And no violations, just like Amcor, just like ENS, right? And so HII has been another one of these where just relentless strength on the weekly chart, no signs of being shaken out or anything. And you look at the monthly, and this looks like another one where the monthly is just getting started, right? Look at the peel out of these moving averages. When you see moving averages stacked like this, all lined up like this, right? That's a signal to you that, potentially the move's just getting started. So, um, yeah, this is just been a beautiful name to own, and I just still really like having it in the portfolio because I don't think the shipbuilding focus is going anywhere, and it's not even unreasonably priced. Right? It's still trading very, very reasonable valuation. So, um, is it historically expensive? Yeah, yeah, compared to what it used to be priced at. But for the only pure play shipbuilding exposure in the whole country, I don't mind paying up for that. And especially the way the stock has acted and these new contracts they've signed recently, multi-billion-dollar contracts being the prime subcontractor. I mean, it's just nothing but good news. So I still really like this name. Again, another one that we have nothing to worry about in terms of the technical structure. GLDD, we sort of touched on this. It's the other sort of shipbuilding exposure here. JP Morgan came out a couple days ago or last week and gave us an upgrade on this name. I bet you they read my thesis. Kind of kidding, but not really. But this is not a name that's covered at all really on Wall Street. And I really like it still. And no concerns about the price action here. I mean, it's been gappy and jumpy because we had our catalyst with my alert, and then we had the J.P. Morgan alert, which sent us to almost 17. Price now coming back, retesting this 9 EMA here. I would like to see a bounce here. If not, it may bring us back down to 1422. I would actually add more there. That's very, very close to my entry point. So I would just add more there if we got a 21 EMA retest. This is a name I plan to hold for most of this year, ideally. Earnings coming up February 10th, I believe, on this one. So um, yeah, I really like the thesis here. Really like the stock, and really like the playground that they're paying in. I actually didn't know, even in the J.P. Morgan report when we read it, that they're the largest dredging contractor in the whole country. I knew that they had a few other competitors. I didn't know they're the largest by scale in the whole country. So that's another sort of tip of the hat for GLDD. So that is very good to see. All right, let's look at Pangea Logistics now. So had a gap here, all right, back in November, consolidated. We got in here, we got another gap, and now we have the stock attempting to flag here on low volume. Would like to see this 9 EMA catch up. Um, Ideally, want to see the stock maybe bounce around here a little bit, or maybe push back above 8 and consolidate above 8, and then let these moving averages catch up, provide support, give it another period of consolidation, then move higher. Again, this isn't just a Greenland play. I think the Greenland angle makes it unique because this is basically the only logistics company in the United States to have ever operated commercially in Greenland at any scale. But they also have a very, very capable ice class fleet that I think will benefit from increased activity in the trade routes in Greenland, period, regardless of the U.S. military's involvement. So I continue to really like it as a shipping exposure. And it's been a while since I've had shipping exposure in the portfolio. So I think it's kind of cool. It's like shipping exposure with a very niche thesis. And I think a reason for multiple expansion, frankly speaking. And, I went and looked through their debt situation, totally sustainable, based on their recent cash flow, totally sustainable debt situation. So I like it. And to me, it's a very, very, very interesting small cap, maybe the most interesting since OSS for me. So I don't think it's going to move like OSS because there's not as much room for speculation on a shipping stock as there is on a tech stock. But I do think it's very, very compelling in terms of how it fits into this whole narrative that's emerging around Greenland and around the Arctic. And the tailwinds to volume for them and the tailwinds to the rates they're able to charge, I think, yeah, are pretty strong. So just waiting for this to consolidate after this big gap up. That's all we're waiting for here. Again, zero concerns on the chart, right? Like, what is concerning about this? Nothing at all. Yeah, we have a little bit of red, but moving averages are bouncing beautifully off the 50. Price maybe curls back here into the 750 area, or we just consolidate up here and then the moving averages catch up, which would be ideal because then, we don't have to see any more red on that name. But that is a good thing to see on the price action. You want to see it flagging. Okay, and the last stock we're going to look at is Kratos, and then we'll get to questions. Kratos. All right, Kratos. So monster kickoff to the year, right? From 74 to 134 in very, very short order. This thing added a lot of fuel to the portfolio early on. Not a big enough position to really, really move the needle, but it did add a lot of fuel on that 50% move in just a couple of days to kick off 2026. Um, Very expensive from where I first bought it. Stock's 5x from where we first bought it. My contracts for my leaps for 2027 are up like 2,000%. So, do I think it's something you should be slamming here? Probably not. Do I think they are the next prime? Yes. Um, so, you have to balance your opinion on that. That's why I still own the stock. I think this is a young prime in the making. Um, I think that's why the PE is so high, frankly. But you have to understand that that opens it up for earnings reactions very similar to what we saw with AeroVironment on their last earnings when that stock gapped down 14 to 15%. Because when you have a stock that's trading at hundreds of PE, it becomes really, really difficult to not have stellar results. They have to have stellar results on every report, right? That's just like a mandatory thing when you're trading at that valuation. So I think there's a high likelihood they're involved in the Golden Dome in some way, but that's not the thesis for this stock. I think it's just a very, very multifaceted defense provider. I mean, they're in all the relevant themes from, advanced turbine technologies, hypersonic, supersonic engines, precision munitions, drones, autonomous systems, everything that you would want exposure to. Kratos has exposure to in one package. That's what I think makes them a unique stock. That's what I think makes them a unique company. That's why I still own it. But again, I mostly own it through the form of leaps and some shares. And so, I have to cross that boat when I come to it in January 2027 when those leaps expire. I'll cross that bridge then, but I'm not really worried about it right now. I do like that we saw a little bit of bounce here. I think this 21 EMA sort of corresponds roughly with the local highs back here. So if you can see some sort of defense here around 110 to 115 area, price starts to shape up here, that'll be a nice sign because that means that you came and back tested these local highs from back last October and buyers are now willing to pay incrementally more. So that would be a good sign to see. Obviously, you don't want to see another 21 EMA breakdown on this thing and for it to fall back to 86, but that is obviously a possibility if that does happen. So their earnings are coming up end of Feb, I believe, Feb 20th. That's what it says here, at least on stock charts. But still a name I really like thematically, not a name I like fundamentally anymore. So take that for what you will. I think it's very, very outrageously expensive now compared to when we first bought it a couple of years ago. But this is a very nice, you know, retest of this general area around this 110 area, and could set you up for a round right back to the highs. Uh, it could be depending on the risk you're willing to take and depending on your cost basis. I mean, saying is it a good time to take profit? That's really, really a generic question because I have no idea when you bought it. I have no idea what your positioning looks like. I have no idea what percentage of your portfolio it is. So I can't answer that question without all that context. So yeah, I mean, how many positions did we just go over? We went over 13 positions. So we went over 13 positions. I currently have 16. The three we did not go over are Robinhood, Tesla, and Amazon because those are legacy positions. I don't really look at those charts in my weekly reviews. I actually will pull up Tesla because I do think this may be setting up for a short-term trade. Yeah, I don't like this look. We'll have to see. Their earnings are on Wednesday. I see you probably decide after that. But if the earnings on Wednesday can defend this 100 day, I think this thing is setting up for a nice long to 500. Um, I'm not going to trade it because I own enough Tesla. I have exposure already. But um, for those of you traders out there, I do think this is a nice pinch here, moving average pinch that we're seeing here. Support at the 100, price poking its head above the 9 and 21. I like the look of that, assuming it can continue to defend the 100 through earnings. If you get a gap down on earnings, then the setup's ruined, right? Because if you get a gap down on earnings, then you're falling out of this sort of wedge to the downside. So that's not what you want to see. But if price can defend the 100 day on earnings, then I think that that's a decent look. But yeah, that covers it. That's the portfolio. So that's kind of what I do on a week to week basis to look at these stocks. Um, If you guys have questions, hit me. But you can ask questions about anything. It doesn't just have to be about the stuff we went over. But yeah, that's in a nutshell what we just did for the last hour and 20 minutes is what I do every week for pretty much all my active positions. I just go through and flip through the daily, weekly, and monthly charts like that. And what I'm looking for is um, points of concern, right? Like, is there anything concerning? And I just flipped through everything and there was nothing concerning to me. So, yeah. I know we play it day by day, but any current positions you're looking to trim in the short and medium term, we play it day by day. I missed OSS. Thoughts on the chart? I just gave you my thoughts on the chart. Interested to hear you talk to the IRDM chart on fundamentals. Yeah, I like IRDM still. I got shaken out of it just for a dumb reason. Like it just gapped down the day or whatever after we bought it, and shook me out. I think it was like here or here. I don't remember where it was. Somewhere around here where I got stopped on those calls. Um, I still like this. I think the polar to polar comms that Mystic highlighted for Greenland, I think is particularly relevant. Um, and I think the stock is cheap. So yeah, I don't have any issue with RDM. In fact, today was a nice entry point. I should have actually looked at this thing today. Decent entry point here today on this 9 EMA retest. Um, the stock is very cheap, and I think it's a good potential buyout candidate. Okay, hold on. There's a lot of questions here. Okay, meta chart. Yeah, I mean it's attempting a 200-day test here. Failed last time. We'll see if it's successful. Not a lot to say other than that. Has to break out of that 200-day spot. ONDS. Nasty candle today. Could send it back to 962 unless you get a stick safe tomorrow, although there is weekly support here at 1070, so that might be your stopping point. Um, That might actually enforce a reversal candle tomorrow because price got close enough to 1070 today. Um, so yeah, that could just enforce a reversal candle tomorrow. I don't know what this is. I can't, I don't know what stuff, like, I don't know anything about this company, so I can't give you an opinion, but very strong chart. Yeah, noisy chart here on SHMD, but not problematic yet. Defending the 21 EMA. Very pretty on the weekly. That's gorgeous. That action right there is pretty. D Pro, I don't know why so many people are asking me about D Pro. I don't own that anymore, but it looks fine. Caught support today. Caught support on the weekly and daily today. I wouldn't be too concerned about today's action. Ugly action, but not concerning yet. I mean, you didn't break the 50. Volume, how it helps shape my opinion on a move. I mean, volume is just a guide for whether or not people are accumulating or distributing mostly. And so what you want to see from a volume standpoint is you want to see big green candles, small red candles. When you see the opposite of that, it's not necessarily a bad thing, but it can be. And so again, put it in context, right? Put it in context. Iron chart looks great. I don't like Iron as a company, but the chart looks fantastic. You cannot hate on this chart. Curling up on all time frames. Iron's probably going much higher. Do you have, can you touch on how volume, opinions on AMBA? Yeah, I've talked about AMBA a few times. I think it's an interesting thesis, but I'm not going to buy a chart that's acting like this. Rejected at the 100, right? Down here, tries to reclaim, rejected at the 200. That's a downtrending chart for now. So, yeah, it needs to show me some technical strength first. That chart looks great. I don't know what this is, United Natural Foods, but yeah, it looks great. UNFI, like really good. Like really, really good. Yep. Daily, poking its head above the 100-day. Weekly, poking its head above the 220 week, sorry. Monthly, trying to test this 200-month breakout. Nice setup. Yes, I'm still looking at drone supplier stocks. I'm just looking for a better entry. I'm not interested in those SaaS companies. We made a nice trade on Path at the end of last year on that earnings, and that was good enough for me. I made a lot of money on that, and I was happy with that. I walked away. Zeta, I got shaken out of like earlier last year. But I'm not interested in that business and re-entering it. Last year I exited UUU. I forgot where I exited it. I forgot where it was. I mean, I have to go back and look. It's in my journal, but I exited it somewhere on one of these breakdowns. I think it was like this breakdown, or maybe this one. I don't remember. It was one of these, I think, around here, below the 21. And I just felt like there was a lot of air to the 50. And it was honestly a really good time because I think the stock fell all the way to 12, like down here before or after I sold close to 20. So yeah, it was a good time to sell. Obviously now the stock is back up there, but I just the valuation was getting out of control for me for this stock, so I just sold it. And there was a bit of a technical breakdown on the daily. No, I don't consider macro at all for portfolio management because fool's errand. Economists can't even predict the macro. Why would I bother? When do you take profits? Where do you exit? That's too generic of a question, and I haven't listened to the workshop at all if you're asking a question like that. TKR. Yeah, I mean, again, I'm not familiar with this name, but if you guys ask me about charts that are just like above all their moving averages, just riding to the upside, I mean, what am I going to say? I can't say anything bad about a stock like this. I mean, it's going up. Price is up. There's no opinion to be had on this. This is not an opinion worthy chart. It's just going up. It looks great. If you're in it, congratulations. That's what I would say my opinion on that is. SoFi, okay, that does not look good. Yeah, just doesn't look pretty. Need to recover at least a few of these. Below all the short-term moving averages, below all the major weekly moving averages as well. Monthly, you have a semblance of support here around 24. What you'd like to see is the stock start to show fidelity to the monthly, which it has. Stop the selling here at 24, and then mount a reversal on the weekly to recapture 26, 27. If you're back above 27, this will look very pretty. So this is kind of one of those where I consider it no man's land. So between 25.80 where price is today and 27.50, I consider that no man's land, which means I would rather, if I was going to buy this stock, pay 27.50 plus than I would pay 25.80. That's going to sound mind-blowing and counterintuitive to some of you, but that's technical discipline. Sometimes it's better to pay a higher price when you have a spot to risk off of. You buy the stock here, you have no spot to risk off of. You could say a monthly close below 24, but there's a lot of time in a month. Are you going to be willing to, let's say, if this thing has a candle that knifes below 24 into 19 and then recovers and gets a weekly close above 24, are you going to be willing to wait through that? That's a question you have to ask yourself. And it matters a lot on sizing and conviction. But yeah, the daily and weekly charts are not pretty on that right now. Any interest in the space names? No. When do you take profit? GXO looking good again. Yeah, I'm sure it is. GXO has been looking good pretty much since we exited. But yeah, GXO looks fantastic. ELAB, just kind of price kind of stuck here. Not really actionable. Another one where you need to see you need to see like the daily chart figure itself out, right? You can't have you I at least I don't like entering stocks where you just have this noise, and look at how the stock's traded too since November. Like, has this a stock you would have wanted to be in since November? Not me. Who wants to deal with this? Like, you run up to 180, get knifed back down to 140, run up to 180, get knifed back down to 140, like over and over again. I mean, I just wait till the price action has cleaned itself up. Stock emerges above the moving averages. Again, this is another one where you would want to pay a higher price. Um, and that sounds crazy to people. Whenever every time I say that, people are like, "Yeah, what? Pay a higher price?" Yeah, sometimes that's the right thing to do, in my view, to buy a better chart. Be sure to tag me because I'm not scrolling past the ones that you guys aren't tagging me on. Rubric. It's attempting to bottom here, but like again, another one where it's going to be a lot of hard work. You have to retake all of these major moving averages. It's just not something that like it's not my style. It does look like it's mounting a reversal off the lows, so take that for what you will, but not my style of stock. I like buying stocks that are strong. Um, LAC, I mean, I used to own it for a long time. What's your approach to price lock? What is your approach price lock with high conviction stocks? I don't know what that means. Either I don't know what that means or that's too broad of a question, or both. LAC, a great chart, great chart. I used to own this. Trump administration's invested. Very nice chart. SLV and GLD. extended, extended, both super extended, but that doesn't mean they can't stop. Okay, are there any questions or is it just a bunch of chart requests? Any themes you've been considering that you feel are around the corner but have not bought names in yet? Um, Not really. I mean, my big fake focuses this year are like specialized aerospace and defense, edge compute, on-device compute. That's really it. And I already have exposure to all that. As a newbie server, how should I think about approaching building positions in this stocks portfolio? Go by the setup or the chart, or is there ways just the way I would suggest approaching stocks in the portfolio is learning how to read a chart. That's what my answer is to every noob in the server that asked that question. My job is not to tell you which of my names you should buy 3 months after I've already bought them. My job is to tell you what I am buying, why I'm buying it, and when I'm selling it, and then do these workshops and stuff like that and help teach you. But my job is not to tell you, hey, Ryan or whatever your name is, you should buy X, Y, and Z, and this is when you should buy them. That's not what I do here. So, um, yeah. That you have to figure out on your own. You can buy stuff when I buy it, but if you don't buy it when I buy it, or you weren't here when I bought it, that's where your own chart reading comes into play, right? And that's where you got to be a little bit independent, right? Just a little bit, and figure that out. Any themes you have been considering that you feel around the corner but have not bought? Okay, I already answered that. Do you approach high conviction? When you say price lock on high conviction names, are you referring to price anchoring? I think that's what you're referring to. Yeah, I don't avoid it. It happens to me too. I price anchor all the time. It's just human psychology. It's part of why when I buy stocks, I try not to scale in. I just go in. I do the research and just go in. And I go in with good size and if my entry's bad, it's bad, and then I get stopped out and revisit it later. And if it's not, then I just ride it. But um, price anchoring is a really, really hard thing to detach yourself from because valuations are relative. And so when you see it, when you're looking at a stock when it's $20 and then you look at it 3 months later and it's $60, I don't want to say it's a good thing to price anchor, but it makes sense why you're price anchoring. And I do that too. And sometimes it'll burn you, sometimes it'll save your ass, but that's not something you're going to be able to avoid. It's not something that you just get rid of over time with experience. Um, are you planning to get any robotics exposure this year? Maybe. I just don't like any of the companies that are pure plays. They're all just so shitty companies. I don't know. I've looked at a handful of them, but they're just not good companies. That's what's the issue with me with the robotics. And then I look at the robotic supply chain, and then all the stocks are super expensive and not growing. That's really the issue with robotics. The supply chain stocks are expensive as fuck and they're not growing. They're only expensive because they're robotics related. And then the non-supply chain stocks, like the OEMs, the people who are making robotics, are all stupid ass companies that make no money and are not profitable. And so it's like, I want robotics exposure, but there's just, I don't know, it's not compelling to me. Um, like none of the companies are compelling to me at all. So that's a problem. Do I ever trade precious metals? No, I own physical gold, but that's about it as far as my exposure goes. Is OSS stock or debt operating expected in the near term? Perhaps. I don't think so, but that's a weird question. I mean, I don't know. Like companies can do offerings for any reason, especially small caps. So the answer to me is no, I don't think that there's going to be an offering, but you shouldn't operate with the assumption that it's not possible. It's always possible with small caps. Small caps need liquidity. They need money. I wouldn't even be mad at them if they did one, to be honest. But no, I don't think they need one. That doesn't mean they won't do one. Mentioned liking Met C has a chart too. I actually looked at that today. I don't know. The chart still looks fine. I just am not gung ho about getting rare earth exposure like everyone else is like all rare earth. They're all rare earthed out. I'm like pretty like my hands are sort of raised at that. And these are all trading at multi-billion dollar valuations with no productive assets. Most of them haven't even put a pickaxe in the ground. I mean, you got a lot of you guys have been conditioned by dumbasses on Twitter to think about investing in a stupid memic way. Like you guys just want stocks that go up, which I get it. Like that's the point. But you can find stocks with a good, understandable, logical thesis that also go up, right? Like without trading any of this garbage, I still outperformed 90% of those kids last year with much better returns on the portfolio with much higher quality stocks. So the idea that you need the garbage stuff to make your portfolio go up is just bullshit. And the idea that so many of you see, I know why so many of you are asking about rare earths because the Trump administration investment and in the last 2 weeks, those stocks have been ripping. And so you guys just have FOMO and you just want to buy garbage because you have FOMO and you scroll through your Twitter feed and then you see these names of these stocks and you want to buy them. It's just a shitty way to do it if you're going to do this for the long term. You're going to end up like a, illiterate about the markets in 15 years and have no idea how to stock pick and you're just going to be chasing the next hot thing. And no one really consistently makes money like that. I have good friends of mine that operate like that, that just want to buy the next hot thing all the time, and they always lose boatloads of money just doing dumb stuff, leveraging options on like the latest popular stock. It's just completely unnecessary to make money. There's so much money, there's so much liquidity in the market. You can get paid in much smarter ways that are way easier to sleep at night. I never lose sleep at night over what stocks I own, ever, because I know I own stuff that I understand and that I have like a real ABCD thesis on that I can walk through and tell myself when it's invalidated or when it isn't. So the meme stock trading thing is just never going to be for me. There might be meme stock names that I trade occasionally. I'm not saying I'll never touch them. I'm just saying it's just not going to be a focus of my portfolio ever. And a lot of you guys ask me about those names constantly, and it's kind of concerning to me because it makes you feel like a lot of you are not learning like what real stock picking is about and what consistent stock picking is about. If you want to do this through like multiple markets, types of markets, bull markets, bear markets, sideways markets, and you still want to outperform, you have to learn how to pick quality stocks, period. There's a lot of environments where that meme shit won't even work. There's a lot of environments where the thematic stuff doesn't work. There's a lot of stuff environment where catalysts don't work. You can't pick quality stocks. That's like the foundation of making it. Like all of these guys, Druckenmiller, Lynch, Buffett, what did they do? What is at the heart of all of their success? Picking good stocks. That's it. That's at the heart of all of their success. Through all the noise and the nuance and everything, it's just, did they pick good stocks? I mean, that's a crazy question. I'm not even answering that. Yes, I consider gaps to be magnets for price. I don't never talk about gaps. I think I've talked about gaps like 6 times in this workshop. I don't know what you're talking about with I don't talk about gaps. Um, okay, just a lot of chart requests. RDW looks fine. 200-day retest today looks fine. Also retest of previous nav. So LRCX, I mean, another like guys, these charts that are up and to the right above all the moving averages, please do not ask me my opinion on those charts. I'm not going to say anything besides, yeah, it looks good. It's going straight up. This one, AVGO, a little bit concerning. Looks like it's attempting to bottom here, but still needs to pick up some moving average captures on the daily and weekly to ground itself. Again, another one here that's stopping on the monthly. You're going to see a lot of these stopping points on this monthly 9 EMA or the monthly 21 EMA on a lot of these charts where the daily and weekly is breaking down. That's where you're going to see the stopping points. You need to look for those. Um, SMCI thoughts on copper. I don't like really find the copper trade to be that compelling. I don't think it's that much of a mystery that we're going to have a copper shortage, and I certainly think Chamath is a fucking idiot, so I'm not going to follow him into any trades. That's for sure. Any thesis Chamath shares is immediately crossed off my list. SMCI weekly, daily. Daily looks like it's attempting to bottom here. You probably have range to $40. Weekly looks very, very tough. You need to get a weekly close above like 34, $35 pretty soon. It just looks very ugly on the weekly. It's not a name I would touch. AMSC, yeah, it's attempting to build a base here on 29, $30. That probably coincides. Yep. Gonna say that probably coincides with the weekly level. And there you go. It's a weekly 100 here. So it's attempting a base here at the weekly 100. It's doing a damn good job of it in quite a while here. This will eventually, I think, curl up, give you a retest of 40. Yeah, just consolidating. CoreWeave, really nice look here. Push up, tested the 200, poking its head above the 20 week as well. Really, really pretty look on CoreWeave. Oh, look at that monthly chart. Gorgeous. Gorgeous. That's a newly emerging 9 month EMA there. It's poking its head right above it. Looks great. Looks great on EMPH too. That's a hell of a last two candles here, pushing up above the 200. Now you have the nine about to intersect the 200. That's a pretty look also on EMPH. AMPX, nice retest of the 100-day here. If you get a bounce tomorrow, that'll be confirmation of 100-day recapture. That'll be nice to see. UNH still looks good. Yeah. Monthly is a little meh, but yeah, still looks good. Path. I didn't think this was going to be just a chart review, chart request thing, but okay, we'll do it, whatever. It's another one where I'd rather buy it higher. You need this thing back above 1550, I think. Messy. It's messy, but it's still holding general structure. I mean, maybe a little generous to call this structure, but yeah, I don't love the setup. You need to retake, I think, this 50-day here. CRS, I don't know this name, but I mean, oh no, I know this name. Carpenter, I know this name. Yeah, I mean, I haven't looked into it in a while, so I couldn't give you a really comprehensive opinion. But again, another nice chart above all the moving averages on the daily. I mean, once I see that, there's not going to be really much to comment on. Palantir starting to flip, sentiment starting to flip negative here in the short term with moving averages piling above the price here. It's you don't want to see that. You don't want to see all the moving averages above the price. I hope I've been pretty clear about that. But monthly still looks fine as long as this thing defends 157, probably continues to uptrend. VVX looks great. And what are you gonna complain about? It's above all the moving averages. I would always split them weighting wise. You don't want to split them equally. Why would you split them that money equally? If you're gonna put 1.6 million into 16 positions, you're splitting it equally what? Just because it looks cleaner? No, you should split it by conviction. You know, um, weightings are, designed for that. You want to have higher weightings in the stuff that you like more. GLW and CCJ. I mean, same thing, guys. These are above all the moving averages on the daily. That's the answer is that those stocks look good. I'm not going to have a negative opinion on a stock that's trading above all of its moving averages on the daily. That just means price is going up. Nice. That's the extent of the opinion on there. You only can have a sophisticated or nuanced opinion when there is volatility to inform that nuance. No, no plan to change based on the Fed chair or yen carry trade. People who change their portfolios based on those things are usually idiots. Do you prefer EMA or SMA for entries or exits? And how do you define a meaningful break? I mean, I generally look at, I wouldn't think about it in terms of moving averages. I would think about it in terms of time frames. I look at the daily chart for my entries and exits generally. On higher conviction positions, I may look at monthly closes. I mean, I hate saying case by case to a lot of these questions, but that is case by case. Based on your question, you should not be doing options at all. If you have to ask me stuff about options or about how much you should have in options or about um, the strikes you should be buying, you're not ready to trade options. Period. You should be massively successful trading shares before you ever touch options. For years, you should be successful outperforming the market trading shares before you ever touch options. So if you have to ask me a bunch of questions about options strikes and options profit taking strategies and options volatility, you are not ready. Period. That's a tough pill to swallow, but do not touch options with a 10-foot pole. Person who asked me that about putting 10 or 15K in options. I pay for the max package, I think. I don't know how much it is, but I've paid for it for a long time. I just like stock charts. It's clean. And I don't do a lot of intraday charting. Most of my charting is after hours. So for the purposes of that, stock charts is just fine. I don't need to look at a live price. When I do, I just look at it in my brokerage. I've talked about how I pick options in other workshops. Go watch my recorded workshops. Why edge compute? Why now? I just don't believe that remote data centers are going to process everything. I don't think that it's a realistic expectation. I think it's actually kind of stupid. I think devices will process the vast majority of everyday AI use case, in my opinion, eventually. That just doesn't make sense to me that all this stuff is going to be routed to data centers. And I think in mission critical applications, that's just not possible. So that's why I like edge compute and on-device compute. I may be a little bit early to that theme, but that's why I like it. To identify emerging themes like this year's focus on edge and defense. I read a lot. All of my like intuition and thematic leanings and all this stuff is just informed by I read a lot and I pay attention to what's happening in the world. And based on that, I formulate ideas of where I think money is going. And that's often thematically related. Like money moves to themes every year, right? There's different areas of interest, different areas of hype, excitement, uh, government policy, and money moves to those areas. And I follow that money. And that's how I identify themes. That's really the easiest way to make money in markets is just follow the money. And people do this in different ways. I mean, the options flow guys follow it in terms of flow, right? Oh, but I follow it in terms of thematic positioning. And so that's, just another way to follow money. No, I don't worry about the risk of offerings on my holdings. Yeah, I looked at government service contractors, but just nothing rang a bell for me. I looked at VVX, SAIC, all of them. They just none of them tickled my fancy. Can you speak to your rationale on rotating capital elsewhere when you have a stock run and begin to take over your portfolio? Okay, yeah. So that's a tough thing that even I struggle with still. How do I answer this? I want to answer this properly, so let me think about it. You only have so much money in your portfolio, right? Like you have, whether you have $10 million or $1,000, you have a limited amount of dollars, and those dollars have a limited amount of margin attached to them. So even if you use margin, even if you're 100%, you use every dollar margin available, there's still a little limited amount of dollars to allocate. So the way I think about winners, stocks that have run a lot, an increase in weighting is, has my thesis been further confirmed as price has gone up, or has my thesis weakened as price has gone up? Right. And like with Amcor, for example, when Amcor entered the 50s, I was thinking, okay, I have to sit down and ask myself, like, are the things that I thought about Amcor in May of last year still valid? And for me, all of the boxes were still checked. The only thing that was different was the valuation was obviously higher. It was double what it was. But to me, it still wasn't unreasonable versus the peers, considering the potential opportunity. So that's a name I let the waiting hold, right? Same thing for nurses. Like I kept looking at nurses, like, should I take profits here? And I'm looking at the rest of the battery landscape, right? And I'm like, stocks are trading at 50, 100 times sales. Like nurses trades at an 11 forward PE. Like, why would I sell it here? And so it's a matter of asking yourself the question of if the thesis is still valid. That I think is a lot more important than where the weighting has gone, right? And sometimes it may be a matter of just diversification of you sitting there and saying, look, I don't care that the thesis is still intact. I'm up a lot. I want to take some profits. That's okay. Like even when I exercised those Inersis contracts in December, I still sold half of them, right? So I locked some profits. I locked a couple $100,000 in profit and then just exercised the rest. So you can you can do both. You can take some trims along the way and then still keep a very, very robust position, right? But that's a tough question to answer. I still struggle with that, with the idea of rotating out of winners or like letting go of winners. I still struggle with that. So it's not something I can tell you that you're going to ever be perfect at. But like if you've owned Rocket Lab since four, like you're saying, you know, Rocket Lab's very expensive here, in my opinion. Could it still run into the SpaceX IPO? Absolutely. But you have to ask yourself when you bought Rocket Lab at four, what was your thesis? What were the things you were looking for? How many of those things have been accomplished? How many of those things have not been accomplished? Do you believe in the execution to accomplish the rest of that agenda? Do you believe in the valuation as much as you did at $4? I imagine not, because it's a lot more expensive now. You have to factor those in. And then eventually, that checklist that you have about the thesis, eventually, instead of eight boxes being checked and maybe one being an X, maybe you'll go to three or four boxes being an X and only two or three boxes being checked. Eventually, the weight of the evidence on the position will say, okay, it's time to sell. And that's when I sell. So I know that's a bit of a probably more complicated answer than you're looking for, but it's like I have a checklist for every stock. That checklist comprises of the thesis behind the stock. When enough of those boxes have been, EPS is not growing anymore. Management has failed to execute. The stock is too expensive now compared to when I bought it. When enough of those get ticked, I'm like, okay, time to get out. And so it varies from stock to stock. Again, I'll have to say case by case, but that hopefully gives a little bit of context on why I exit or enter positions. I think a lot of people would think about it if you're a make 200, a lot of people would be fine with it. How do you pick good stocks? I don't look at Yeah, I mean, all my workshops are about stock picking and stock monitoring and stock selection. So, um, yeah, watch the other workshops. What breed is my pup? He's a lab. My favorite memory with him. Um, I got him at 2 weeks. His mom passed away in childbirth, Leo's mom. So I got him when he was a small, tiny baby. I had to like sleep with him in a wet blanket for his first couple of weeks. So that's probably my favorite memory. Um, any solution with the scalpers in the group? I hope they all got burned. Uh, yeah, I mean, people get burned when they chase, but people lately the issue has been obviously that people are aping into all my picks because they think they're all going to go up every day in perpetuity, and that's just not the way my picks work. My picks don't just like rip the first week I own them and then they go to the moon. That's not how it works. They develop over months, over many quarters, over different catalysts, and many of them go higher and higher and higher and higher. You look at Kratos, Nebius, HII, so on and so forth. They've just gone multiples and multiples higher from my cost basis. So, yeah, if you miss my entry by 5 or 10%, it's probably not the end of the day. People have followed me very successfully for a long time without getting the same entries that I get. So, yeah, it's just something we'll have to deal with. The group's getting bigger. I'm doubling prices to try to limit the size of the group, but there's only so much we can do to limit it. So. We'll see if that helps. Oh, what's the backstory with Chamath? Nothing. He's just a baby. He blocked me a long time ago for calling him out. But that's not why I don't like him. I just don't like him because he's just childish and yeah, he's a fair weather fan of the stuff that he is a fan of. How do you approach valuation models in your research? Do you set your own price targets and build your own models? I do not set price targets. I don't think about potential in that way. I respond to price as it goes up, and then I think about it and observe and look at the valuation benchmark and so on and so forth. I already went over Nebius. You can look in the resources section. We have some resources in there about that. Solar thematic coming back into favor, maybe. A lot of the charts are looking a lot better. I don't really factor in options flow. It's nice to see, but I don't, it's not a decision making thing for me. I don't deal with black swan events. I just react to them. I don't predict them or have a plan around them. Black swan events are always going to happen. There's always going to be market crashes. There's always going to be fuck, my back hurts. There's always going to be market crashes. There's always going to be pullbacks. There's always going to be like news. There's always going to be these kind of things. You cannot predict those things. So I don't bother. I just wait for them to happen and then I react as necessary with the portfolio. Yeah, Galaxy, I can't tell you what to put your money in, man. You're gonna have to decide that on your own. I can't like instruct you on where you should put your money. You've got to decide that. What frequency are new alerts provided whenever I want to buy them? For me, there is no set frequency. It's not like I give a new idea every week. However, the rest of the analysts in our community provide plenty of regular ideas. So you should be able to scroll through their journals if you're bored or if you're like waiting for an idea from me and you have money and you want to trade and you don't want to wait for my idea. You can look at the other analysts. That's why they're here. They're here to provide you guys with content in between my picks. But my picks sometimes are very frequent. Sometimes they're a couple weeks apart. Sometimes they're a couple days apart. I don't have a cadence that's regular. Just depends on when I see the opportunity. Then I take a stab and I tell you guys about it. Basically, Do I put much weight into the cash to market cap ratio? No, not at all. I look at like price to free cash flow, price to earnings, price to sales, EV over EBITDA. That'll give you a perspective on debt. I also do look at, debt to book, debt to equity, to get a better perspective on debt, sustainability of the debt, how much debt is short term, how much debt is long term. What's the interest rate on the short-term debt and the long-term debt? Is it operational debt versus, standing debt? Is it tied to lease liabilities or operating costs or shipbuilding or whatever it is? Is it tied to some commercial aspect of the business that can generate immediate revenues? Is there sustainable cash flow to pay the debt? Are they in a high debt situation and then abusing buybacks and dividends? Like these are the things I look at when I look at debt. I don't look at like some arbitrary number and then just run with it. But yes, debt is very important to look at if you are looking at anything fundamentally. Cena, I didn't take leaps. I took March calls because I don't know how the earnings are going to go. So why would I pay extra premium if I don't know how the earnings are going to go? If I'm going to take the risk now. The earnings go badly, then I take a haircut on the March calls and I don't have to take a haircut on leaps. That's why I chose to do that. After testing out Gemini Pro, do you like it better than ChatGPT Pro? I actually still like GPT Pro better, but that's probably a controversial opinion. But I use both. I do not mention stocks that I'm studying because this community is crazy, and if I do that, then they'll just buy them before I buy them. Dallas Cowboys cheerleader. Yeah, yeah. Stanley Druckenmiller didn't say that this year, I don't think. I think that's an old comment that people are referring to about him saying it's the tightest position ever. I think that was a few years ago, but I could be wrong. But maybe he did say it this year. Either way, I think it's a crowded trade. I think if you were long copper in November, that was a good trade. I'm not going to get along it here though. Not saying it can't go higher. A lot of times people mistake my opinion by saying I don't want to own something as me saying like short it or it's done. No, that's not how it works. Just because I don't want to buy something doesn't mean that the trade's over. It just means that it's just not the right risk reward for me. All right, I think that's all the questions. Will GTA 6 ever be released? Long TTWO? I don't know. It's been a while. Pats or Seahawks? Pat. Do I think AI integration is worth paying attention to for future opportunities? Yeah, I guess. No, not 600% per year, my friend. 500% last year. That was my best year ever. You should not expect that every year. But you should expect me to outperform the market, though, which I will. Yeah, I know. I knew you guys were going to freak out over that. Yeah, obviously the Seahawks are the much better team. I'm just going with the story stock. Are you still looking into memory stocks? Yes, I am still looking at memory stocks, but I don't know. I feel like I just should have bought Micron at the end of last year, like I wanted to, instead of just like battling around the supply chain. But I sometimes overcomplicate things, and I think that's a mistake I made with the memory stocks. But I'm not going to buy Micron here. Um, I did scalp it when I put out that tactical note a couple weeks ago, or whatever, last week or whatever that was. When I put out that tactical note, I did scalp it that day, but um, didn't hold it. No, I used to play video games when I was like younger, but not anymore. I don't really watch streamers either, but I do think Peanut's funny. I've seen clips of him. I'm talking more about government policy, not government funding. I don't know. I'd have to go back and calculate it. I've only had a consolidated account since the beginning of 24 because prior to that I had like four different accounts. So I would have to look at the average return across all those accounts to give you an answer to that. But it's very, very high. It's much higher than like your average hedge fund, but that's not me comparing myself to hedge funds. It's because, you know, I'm not trading billions, I'm trading millions. It's much easier to trade millions than it is to trade billions and without regulation and rules and all that stuff. I don't ever compare my return to hedge fund returns. I don't ever say like, "Oh my God, I'm destroying the hedge funds because I should be." You know, with a smaller amount of capital, more flexibility, you should be doing better. Yeah, it's the problem is all those stocks are discovered already. That's the thing. I agree with you that HBM, co-packaged optics, like, but those stocks are all already known. I'm not discovering any alpha there. You could buy them, but I prefer to like find unfound alpha and rock with that kind of stuff. That's where your big, big asymmetric opportunities are. What platform do I mainly use for trading? Webull. It's my favorite interface. I've traded on every platform, IBKR, Thinkorswim, Robinhood, all of them. I've used them all. I've gone over this a lot of news sources I recommend. I mean, it just depends on what you're looking for. I've said this before, Bloomberg Intelligence, Refinitiv, The Fly, Street Insider, so on and so on. There's so many quality news sources. You don't even need to buy a news source, honestly. Wall Street Engine in our server posts all the important news in the news channel every morning. You don't need anything more than that, to be honest. Um, if you do want more, like I said, go sign up for Bloomberg Intel, Refinitiv, Yahoo Premium, um, The Fly Premium, Street Insider Premium. All those are good too. No, I'm not concerned about the currency difference. Is it much easier being in one platform instead of four? Yes, it is much easier for me. When I was on when I had four different accounts, like it just was too much to manage and was pretty annoying. So I just decided to consolidate most of my stock assets into one account. How do you typically hedge? Depends on the portfolio composition. Right now, the way the portfolio is built currently, I would use ARK-K as a hedge rather than SPY. But like last year, there were moments where I felt SPY was a better correlative, so I use SPY. It just depends. It'll usually be either ARK-K or SPY that I get puts on. Because I'm not tech heavy enough to be hedging with Qs. So yeah, usually SPY or ARK-K will be what I get puts on if I am gonna hedge. Your girlfriend wants a Porsche 911 for 200K. Where to buy call options to gamble? That's a crazy question. Are you way concerned with the cost of USS Trump? It'll be like 14 billion. It'll just take funding from carriers. No, I'm not concerned about that. Our defense budget's going to go up next year again. The one thing you should not be concerned about with the US military is funding. All right. It's about 2 hours and 15 minutes. Pretty long. Hopefully that was helpful. We'll do another one maybe next week. Um, yeah, I think we'll probably do another one next week. Um, but yeah, hopefully that's helpful. Listen to the recordings. Pay attention to the little stuff that I talk about, the nuance. That's the reason I do these workshops, is so that you guys can see in action how I look at this stuff. Um, so pay attention to the nuance. And then, ask me questions. If you have specific questions about what I said, ask me questions in the questions channel. I'll answer them. Just try not to ask me stuff that you can search in the Discord because that is always annoying. Um, because yeah, I don't want to. waste my time answering questions that you can search up. So if you want to see my opinion on a ticker, original thesis, type into your Discord search bar from colon Stock Talk Weekly space and then put the ticker. You'll see every post that I ever made on the ticker going back years. So, if my opinions have changed on something, you'll see that. If I called something a shitco, you'll see that. Whatever the case is, you'll see what my opinions are by doing that. You'll probably have to scroll through some portfolio updates if it's a portfolio name, but you know, use your thumbs. You'll be fine. Yeah. Anyway, hopefully that was helpful. See you guys tomorrow. I mean, if the price action is pretty much the same as it's been these last couple of days, it probably won't be doing much. Just letting stuff consolidate, letting stuff bounce around off support. But as always, if I do anything, it'll be in my journal and you'll know. Um, I have a sleeve of stocks that I want to buy, 6 or 7 names, but none of them are at spots that I want to buy them at yet. So alerts could come at any time. I'm not going to give heads up for alerts anymore because you people are crazy. But um, pay attention to my journal. Alerts can come at any time. New positions can come at any time. So um, just be mindful of that. But yeah, watch the workshop back if you missed anything or if you want to slow a part down or whatever. And then I'll get this posted pretty briefly. It usually takes like 10 minutes to upload. And then I'm going to go to the gym and then go to sleep. So have a good night, everybody. Take it easy.